For more on the financials and what's ahead for the sector under the Biden administration, we are joined right now by Ron Kruszewski. He is Stifel Financial President and CEO. And Ron, what Wilf just said, that last point about the banks being up 40% over the last 3 months, there were some very high expectations heading into this earnings season. You think there's still some room to run. Why is that?
Well, for the banks, look, you can just see it's activity levels, and you can kind of parse the results a little bit. You don't see a lot of net loan growth, but you see a lot of activity in these universal banks. So when you see what J.P. Morgan posted and Goldman this morning, you're seeing tremendous market activity, which is the result of almost redoing the economy. All that activity runs through financials. So the financials are very busy, and I think they're going to be very busy in 2021. Activity levels will be high, in my opinion.
How much of this is the idea that we're going to see a lot more stimulus spent, and that means we'll see fewer bad loans?
Well, certainly the fewer bad loans is a result of a tremendous amount of not only stimulus on the fiscal side, but on the monetary side. And that is certainly driving the market. But, as you think about it, I'm listening to you this morning, what makes me bullish about the market also makes me very concerned about the market. And the fact that we're talking about $5 trillion of stimulus, as a previous guest said, 25% of GDP, and $130 billion of QE, both of those factors are at full tilt, in my opinion, to this market. And at some point, this trade needs to balance out. We're not going to be pumping this market with this kind of fiscal and this kind of monetary stimulus. Personally, what I think is a real risk to this market, and everyone says it can't happen, so I raise my risk factor even higher, is a rather sudden increase in inflation expectations and long-term rates. That would take the air out of a lot of these stocks.
Yeah, that would be concerning for sure. Let's talk about what we can expect under this incoming Biden administration. Additional regulation probably high on the list. What do you think about Gary Gensler coming to the SEC? What do you think the signals that you're seeing at this point mean for any of these stocks?
Well, for sure, you're going to see higher regulation. I think that Gary, very experienced from his previous experience. And I believe that you're going to see a lot of movement on disclosure, ESG disclosure. There'll be a few factors in the in financials. I'm sure Reg BI is going to get looked at. So it will be on the regulatory front through interpretation and enforcement and guidance for sure. But that's what you would expect. I've been CEO under 2 Democratic administrations and 2 Republican administrations, and we'll get through this fine. So I'm not overly concerned about a regulatory, cliff that we have to go over.
Shepard Smith here. Thanks for watching CNBC on YouTube.